Good afternoon, everyone. Thank you for attending the session. My name is Stephen Perozzi. I'm with the bank's FCV group. And thank you again for your patience. So this session is, what do SMEs and domestic companies need to survive and even thrive in FCV environments? So before we start, I just want to go through, mostly for the benefit of those attending online, some housekeeping. So anyone following on the attendee hub and you need translation, there actually is a translation button that you'll find. It's AI driven, so it's as good as it'll get. If you need to ask a question or make a comment, please use the online comment section. There is someone actually monitoring the chat, and we'll bring those we'll raise those questions towards the end. If you're in person, again, we'll have a Q&A at the end of the session. Just raise your hand, we'll pass around mics, and we'll switch between online and people in the room. If you're connecting through Cvent, one thing we notice, if you disconnect and try to come back, it gets a little wonky. So, if you need to step away from your desk or wherever you're doing, please just stay connected. And if you're using social media, please use hashtag Fragility Forum. And so now what I will do, our moderator that's scheduled for the session is in a board meeting right now. So we're very happy that Jumoke Jagun Dakunma has filled in for now, and she is the head of FCS Africa. Chief Investment Officer and head of Fragility Africa. And then she'll be joined by Anastasia Gekas, who's the head of Global Fragile and Conflict Situations. So right now, we'll turn it over to Jumoke. Thank you.
Good afternoon, everyone. Good morning, good afternoon if you're online. Thank you very much for joining us at this session. A bit of further housekeeping. Please, can you mute your phones? Thank you. This session on MSMEs and domestic companies, we all know that they are the life of in FCV situations. It's a critically important topic, and over the past few days, we have heard a lot from the first session with President Chapo, with Roland on the next panel, and several other speakers over the last yesterday and today. We've heard how MSMEs and domestic private sector are central to jobs, growth, economic livelihood, resilience in fragile and conflict situations. We also know that there is a significant gap between policy ambitions and the realities that these firms face on the ground, from insecurity and limited access to finance, to weak infrastructure, constrained market opportunities, and so on and so on. I mean, if you had a long time, I could go on with all what they face. This conversation is timely because, as you all saw in I believe you would all have read the new FCV strategy. That's some homework you need to do tonight if you haven't. MSMEs and domestic private sector are central to the World Bank Group FCV strategy for how to create growth and get the jobs that are necessary in those markets. So one of the things that we're really trying to do is come up with an integrated approach, World Bank Group wide, to see how we can combine upstream reforms, investment advisory support, and de-risking tools to better reach these firms. Those of you who were at the morning session also heard what Magda said about these firms. So we're fortunate to have a distinguished panel of leaders and practitioners who bring deep first-hand experience from some of the most challenging environments to this topic. So I look forward to a rich practical discussion. As you know, I'm not Anastasia. Once she comes in, I will give her job back. So I'd like to introduce my panel. To my left is, yes, that's my left. To my left is Roland Fomundan, who is the CEO and founder of Greenhouse Ventures, a leading innovator in sustainable agriculture in Cameroon. You heard and saw him on the opening panel yesterday. He's recognized as the father of modern farming in Cameroon. To his left, we have Ethiopia Stafara, my boss. He's IFC's Regional Vice President for Africa, overseeing all investment and advisory operations across the continent. I could give you loads and loads of accolades of what he does. Previous to that, he was Vice President, Chief Risk, Legal, and Sustainability Officer and Partnerships at NIGA. And prior to that, he was Chief Counsel of IFC and had been in this. So lots of things to do with previously on capital markets and all that. So if you want to ask those questions, he's your man. And then to his left, we have Tamara. Tamara Guerin-Barão is Vice President of Administration and Finance at Caribbean Bottling Company, Haiti, Haiti's largest water bottler, where she has served as CFO since 2006. Previous background is a combination of investment banking at Morgan Stanley and IADB, and so she brings a unique mix of development finance and then moving into FCV. So and the fact that she left high finance to go back to Haiti, she's really committed. So, and last but not least, we have Safia Al-Jabri, who is Executive Director of the Small and Medium Enterprise Promotion Services in Yemen. She leads one of the country's most resilient development institutions, driving innovation and economic diversification in the MSME sector, with a focus on vital industries such as health and food. She's joining us online from Sana. Hi, Safia. So, I have a general question first for all of you. And I'll start with Tamara. MSMEs and other domestic companies are central to jobs, livelihoods, and socioeconomic stability in FCBA context. Based on your experience, what are the key benefits that MSMEs and domestic companies provide to local companies and the economy? Why are they well suited to creating economic opportunities and supporting livelihoods? You have 4 minutes.
Thank you very much. It's wonderful to be here today with you all. MSMEs have an essential role that they play in the economy, especially in a country like Haiti. At Caribbean Bottling Company, we work with about 1,400 MSMEs, and they are our ears and our eyes on the streets and on the terrain. And they are the ones who are the critical links between us and our consumers and our customers. And they provide us with information on what the needs are and what the desires are and what the aspirations are, so that we can better position ourselves to supply that market. And what we've realized is that the more we develop a strong relationship with MSMEs, the better we are able to service the market, and the better we are able to respond to the needs that are unique. And sometimes when corporations become large, they have a disconnection and they don't understand what's going on the ground and the challenges that they are on the ground. And for us, it's particularly important for us to understand these challenges because we are delivering a product that is essential for life and well-being, which is water. So without these entrepreneurs that are resilient, that are essential, and that are really the lifeline of the country, we would not be able to do what we do, and we would not be able to attain the markets, and we would not be able to supply the services. And in a country like Haiti, there are so many challenges. First of all, the insecurity. As I said, we're working with about 1,400, but that number was at 1,800 before. And we had many who had to close down because of the situation. And we've had many who had to move. And when it's like that, they are left to themselves. So we've had to step in and help to finance some of them so that they can restart their operations and so that they could continue in the new areas where they've had to move to. So security is a big issue that they're facing, a big challenge. Access to financing is another big issue because a lot of times they don't have access to formal financing and sometimes they have to go through microfinancing at very high interest rates. So it is a challenge for them. So in all, when you look at what the employment market is in Haiti, or the employment statistics in Haiti, we only have 5% of jobs that are provided by the formal sector, and we only have the formal private sector, and we only have 5% of jobs that are provided by the public sector. And we have between 10 and 11% of jobs that are provided by the informal private sector. And you have 75% of jobs that are completely informal. And so we're talking about street vendors that are working in terrible conditions, out in the sun, out on the streets, with no bathrooms, really working in filthy environments, or there are taxi motor drivers that are working in an unregulated sector. And so one of the leading causes of death for young people in Haiti is actually motorcycle accidents. So when people are able to move from that informal sector and move to the having an MSME, and they're able to formalize and hire people, this is an opportunity for job creation. And as I was saying earlier in the podcast, to move Haiti from the level of poverty that it's at, we would need to create a minimum of 100,000 jobs, and some economists say up to 150,000 jobs per year for the next 20 years. And we would not be able to do that without creating an environment where MSMEs can be created and be maintained. So we really need to think in terms of policy, what needs to be done for creation of MSMEs and for maintenance of MSMEs. We have a very young population. The median age is 24 years old. So that is an opportunity. They are dynamic. They are entrepreneurial in spirit. So let's seize these opportunities and let's work together to make sure that we're able to provide youth in Haiti better than what they've seen for the last 20 years. Thank you.
Tamara, thank you. And my apologies to everybody for being late, but I got stuck in a board meeting that ran over. So apologies. And I'm sorry to have missed the initial bit, but just the end bit was kind of really enlightening in terms of the huge opportunities that we have in Haiti. So I'm wondering if we can continue with the first question with perhaps Sophia online. If you can come in for me.
Yes, good evening, everyone. I hope you can hear me well.
Perfectly, thank you.
Yes, it's a pleasure to be with you all and to virtually meet my fellow speakers again. I do agree a lot with what my colleague just mentioned about MSMEs in fragile and conflict settings. And I would say that in fragile and conflict settings, MSMEs sometimes are not simply part of the economy. They do often become the economy itself. And in Yemen, this has been true because Yemen is very private sector led, predominantly composed of MSMEs. And we've seen the private sector taking a leading role in providing essential goods and services, including electricity and water, after the conflict and during the conflict situation in the country. Yemen's population is also quite young. It's a young population, and we've seen an entrepreneurial spirit within this kind of like the young generation of Yemenis. And throughout the conflict, we witnessed that there are a lot of women-led, women-owned, and youth-led enterprises that have undertaken risks associated with the instability to invest, generate income, deliver vital goods and services to communities, even those in rural areas. These MSMEs, they don't only fill critical gaps, but they are also creating jobs and sustaining some of the existing jobs. So it's important to also note that when we talk about job creation, is about creating new jobs, but also trying to sustain existing jobs in FCV settings. So from our experience in SMEPS, we've worked across many of the economic sectors, and specifically we've worked on agriculture, fisheries, livestock, the coffee sector, and entrepreneurship. And we've always followed a value chain approach or a systemic kind of like development approach in Yemen. So we've noticed that MSMEs and private actors across these value chains, they don't just create jobs, but they also strengthen community resilience because they're very deeply rooted to the local communities, and they do have this agility to adapt and are better positioned to adapt to shocks. They are quite creative and innovative in terms of looking for opportunities for investment. And I always say this, that even with fragility and conflict, opportunities do come up, and it takes the willingness to undertake these risks to be able to invest and leverage on what's existing on the ground as well. I'll mention a few examples to just give you a feel of on the ground or of where MSMEs have created a difference in Yemen. We have the coffee sector in Yemen where we always say that we have, there is this debate of where the origin of Yemen comes from. Is it Yemen or Ethiopia and so on? But then after the conflict, what we saw was that the coffee sector in Yemen, yeah, I know. We have the coffee sector in Yemen. Before the conflict, it was very, very much led by elites and big traders. And then after the conflict, it completely transformed, where we saw a lot of young generation coming in to support the specialty coffee industry in Yemen. So they were willing to invest, and they worked a lot in terms of improving the branding, the marketing, market access, both locally, international, and they did a movement towards bringing back the legacy of mocha and connecting it back to Yemen. So that's one of the sectors that has really, really transformed in Yemen after the conflict and led by MSMEs. And in agriculture, what we saw was an acceleration in innovation. So a lot of farmers have moved to solar technology. We've also seen an expansion in greenhouse farming across Yemen. We've seen an introduction in modern technologies in farming to reduce production costs and increase quality because of, again, a blockade in imports where, farmers, MSMEs have that need to improve local production. And one particular example in the agriculture sector as well in Yemen that we've seen, that we've supported with the World Bank as well, has been the potato sector. So in Yemen, we used to import potato seeds from outside, and we were fully dependent on importing potato seeds. But after the conflict, the private sector, there was a tissue culture lab that had an idea of producing first generation seeds in Yemen. And they actually created a strong partnership with the public sector with support from donor funding, and they have succeeded, and we've completely cut down the imports of potato seeds to up to 10% of only imported seeds in the country. So we have first generation seeds. And this has been, not just in the potato sector, but in other sectors as well within the agricultural sector. So the message would be that MSMEs in fragile and conflict settings, they do have the knowledge, they do have the adaptability and willingness to undertake the risks if they do have the right support. And if this is prioritized, because in many of the FCV settings, we kind of like undermine the role of the private sector and move towards humanitarian assistance and kind of like disregard that development can also happen when there is fragility and if the private sector is existing on the ground. Thank you, and over to you.
Safia, thank you very much. That was great. The examples were wonderful, and I think the point around creativity and innovation was kind of spot on. Speaking of greenhouses, Roland, maybe we can come to you. Thank you.
Thank you very much for having me. Good afternoon and good evening, everyone, those online. It's wonderful to be here again and being able to share on this very, very important topic. You see, when we talk about MSMEs, we're looking directly at the private sector. And if we're looking at Africa, the private sector is the champion, because now we know that the median age for Africans, it's 22 as we have it. They have the youngest population. And it is a cause for concern. As much as they're young, they're vibrant, how do we contain this fast-growing population? The private sector has proven that they have the ability to absorb this growing population, especially the youths, which, of course, if not absorbed, they are the ones that then form communities that become FCVs, which is very important. And I want to bring you guys statistics. We say that 65% of the population are farmers. And there has been a lot that has been done to improve the lives of farmers. But, the challenge is that do those resources actually trickle down to those farmers in the last mile? And I'm talking not only about micro farmers, I'm talking about nano. You're talking farmers at very, very small scale. These are farmers that when they don't get access to those right tools and resources, they switch. When communities become violent, they become fragile. It is because these young folks in these areas feel that they are stripped of the opportunities that could be given to them. And our goal was actually looking at this population. Every business that is there, be it public sector, be it resources from DFIs, they mostly end in the cities. And the challenge has been that those in those deep rural areas now feel like they have to go to the cities to benefit from that. And it creates another imbalance. There's rural urban migration, there is youth delinquency that is happening, there is congestion, there is all of that. And we believe that decongesting all of that, we needed to create a whole agricultural ecosystem that can resolve these challenges at every level. First of all, we started with greenhouse farming because we realized that the youths of today no longer want to do farming the way our parents did it. And it is a growing concern. Africa, we have land, we have water, we have human resource, but nobody wants to be a farmer anymore. It is a growing concern. Today, if, WFP has to provide food for Cameroon, there are times the food has been imported from other countries, not because we cannot produce, but there is nobody who can produce at the scale that is needed. And we understand that. Today, we have breweries that will need corn, but they are unable to get corn locally because you have small local producers who are unable to meet the consistent need of these breweries. Now they have to import. But how do we create a system where this is done locally? And that's where we have really been championing that. We started with greenhouses because we wanted to introduce a new way of farming. And believe me, it has shifted the way young folks have looked at agriculture, because now people are proud to say, I am a farmer, because farming had become a mental distress. Nobody wanted to introduce themselves as farmers. Nobody wanted to be looked upon as farmers because, the connotation you have as being a farmer seems derogatory. I mean, I remember myself living in the United States going back home and telling my family that I'm doing agriculture. They knew I had failed in life. No, it was a total failure. I mean, how do you go leave from an Ivy League school in the US and then coming back that you want to do agriculture? And it wasn't talking about me coming back and owning some hectares and hectares of land. It was greenhouse farming. I mean, I remember my uncle telling me, we have been doing agriculture for 100 years, and you come with this small thing to show us that we can do agriculture and sustain. But they never understood what we're looking at, because we realized that we needed to start changing the way people look at things. Today, we have succeeded in creating a franchise model in agriculture, which is the first in Africa. And we've been able to build over 2,000 greenhouses. We've been able to substitute the importation of crops that were normally being imported. You would imagine that Cameroon used to import bare tomatoes. We used to import cauliflower. We used to import cherry tomatoes, strawberries. Today, there's no more importation of that. But we realized that doing greenhouse farming where, including others and secluding others. So how do we now make something that is more inclusive? We left from the cities and now decided we want to go into those rural areas where we felt that, those people were not connected to the grid. I mean, I got to discover that there were Cameroonians living in Cameroon who didn't feel that they belonged to Cameroon. Because one, they are not connected. They don't even watch the national TV that we are all part of. So everything that they saw and heard was totally how they were being told. Today we have a crisis in Cameroon, in the English-speaking region of Cameroon, because those people living there they've been told that somebody's coming to take away their lands. And that is an ideology that we have to dispel. So what did we do? We started going to these villages, federating them into farming communities. Of course, they are farming communities, federating them and then bringing resources to them where they are. So we started a microfinance particularly for farmers that operates on a model which is a hybrid between traditional financing and Islamic financing. So we do not only provide them with the tools and resources for farming, we actually follow them up through that production process and then even guaranteed markets for them. But it was not only markets where they could sell their products, but sell at a profit. Because many a times the bank would give you money, put an interest rate to it, and they don't care what you do, and they don't care when you have to pay, or they don't care what you do to pay back. And that became a big problem, especially this year in Cameroon, where cocoa prices and corn prices went down. People who took loans couldn't make it. So we have been able to come up with a model where the bank itself is involved in actually the marketing and the sales of those crops, so that if X took money from us, say $100, we have to make sure this person has products up to $200 so they can pay off. And adding to that, we included a satellite monitoring technology. And I would have to thank Mr. Etopis, who's right next to me, because the last time we met in Cameroon, he made mention of something like that was needed. And I said, we had been working on that. But that helped me now to further develop it. We have a satellite monitoring technology, which is fascinating. We are able to monitor farms from far and near. We're able to detect diseases from farms. We're able to intervene, on those farms from where we are, providing them with good solutions on how to improve on whatever it is. We're able to predict the harvest of a particular farm. And because we're able to do that, we are now able to guarantee the market for those farms, for those products. And since we have products coming from many farmers, we are now able to aggregate those crops and can now get into, bulk buying and bulk selling. Today, the brewery companies or the factories no longer need to import. As a matter of fact, a month ago, we actually lobbied to the government to stop the importation of corn because we had local farmers with corn that couldn't sell. And 2 days after, that banning was made. And today, we've been able to leverage that and sell corn that has been produced locally. So that is just to say that we all know it. Agriculture is the only industry that can recruit or provide jobs for 100,000 persons within a week. And we need to create an ecosystem for that. The challenge has been that we create one solution to solve a whole agricultural problem. It's like chasing the wind. We have to create an ecosystem, and that is what we've been able to do in Cameroon.
That's great. Thank you, Roland. It's super interesting. Yeah. So it's super interesting the dominoes that you've managed to put in place to enable the MSM, the local farmers to grow and develop, and how important that is to really enable scale and volume, in your case, from the agribusiness side. Ethiopius, can you come in and bring us your perspective as well on this question? Thank you.
Sure. First, let me say that Sophia neglected to say that Ethiopia and Yemen were considered to be part of the same kingdom at some point in history. So it's fair for her to say that coffee started in Yemen, just like it's fair for me to say it started in Ethiopia. But setting that aside for the time being, the greatest source of fragility and conflict is a lack of hope and prospects, right? So that's why it's incredibly important for us to focus on job creation. And irrespective of the economy, fragile or otherwise, 80 to 90% of the jobs are created by MSMEs, right? They are the lifeblood, as Jumoke said at the outset, of most economies. So it's particularly important for us to focus on making sure the MSMEs have what they need to grow, because they're the ones who are going to be creating the jobs. What we see as the challenge in all settings, including fragile and conflict-affected settings, is two things. It's preparation of SMEs for financing. You'd be surprised how many of them are interesting businesses, but are not businesses that financial institutions are necessarily prepared to finance in terms of how they handle their accounting, in terms of how they deal with their inventory. So there's a lot of work that we need to do to prepare them for financing. And we spend a fair amount of time doing that in the markets in which we operate. But the other piece of it is getting banks and others to actually undertake the financing. And we have this problem in Africa and elsewhere of what I call the missing middle, or what's called the missing middle. You have the large SMEs that banks are prepared to finance because they have collateral. It fits their collateral-based approach to assessing credits. You have the really, really small ones that microfinance is prepared to finance. But then you have in the middle these very important, frequently cash-based businesses that don't have collateral, create tons of jobs, but don't get financing, right? And so that's part of what we need to solve, is incentivizing banks to go deeper into this missing middle, but beyond that, to actually work with fintech and non-bank financial institutions who are prepared to take an approach to credit assessment that is not collateral-based, but it's behavior-based, right? And we've seen successes of this around the world. So that's, I think, the big task we have. And in Africa, it is particularly acute, as Roland was saying. If you look at the numbers, 70% of the population is under the age of 30. 50% in many places are under the age of 15, right? It's an asset, it's a dividend, provided everybody's employed, right? If they're not, it is really going to be more than just a challenge. It can actually be a source of real difficulties and conflict and trouble. So we really need to pay attention to SMEs. And as Asafia said, even in fragile contexts, services are needed, goods are needed, right? And so supporting this ecosystem is a sensible way of addressing fragility. Last thing I'll say is with respect to what Roland is doing, which I think is terrific. I mean, Africa has, its agricultural potential is astonishing, right? 60% of the, I think it's 65% of the world's remaining arable land is in Africa. And I grew up in Africa. You throw something on the ground, it grows, right? So the fact that 80% of food is actually imported makes no sense whatsoever, right? But we need to help not only create jobs that are agriculture, let's retain the existing jobs, right? Because you see a lot of farmers selling their land moving into the city and becoming part of the urban poor, right? And technology holds a good part of the solution. So we've worked with ag techs, much like Roland is doing. And it's fantastic what technology can do. Using technology, these ag tech firms can determine what farmers need. They will geospatially map a group of smallholder farmers, determine what they need in terms of seed, in terms of fertilizer, in terms of mechanization, provide them with these services. And as they work with these smallholder farmers, they collect data, which they digitize and make available to banking institutions. On the strength of this better data, the banks are more prepared to lend. And we incentivize that lending by providing them with risk sharing facilities and guarantees. And then these ag techs also act as off-takers, or they bring off-takers. And in essence, what you're doing with technology is you're aggregating smallholder farmers into a business. Individually, they may not survive, but as in aggregate, they can. And this is all through the benefit of technology. Now, these ag techs frequently need support at the outset. So we need to figure out how to support them. They're not necessarily thriving businesses when they begin, but they serve this connecting role, which I think needs to be supported. And I think if we're successful, as Roland is saying, we'll end up making agriculture a real important part of economies in Africa, particularly given the huge potential when it comes to agriculture.
Absolutely. That was really nicely put. And the whole potential around digitalization and technology, I think, is a little bit like the world is our oyster in terms of what we can do with it going forward, particularly in Africa. So moderator prerogative, given that we have 45 minutes and I wanted to get through to give people the opportunity to ask some questions, but I really wanted to ask each of you individually around your own experience, right? And the experience that you have on the ground, because practical, I think, is what makes us do stuff better, right? So examples as opposed to theory. And so Tamara, if I can start with you around the Caribbean Bottling Company, you noted that, and we all know that it operates in a complex and insecure environment, and yet you've managed to build a business model that largely due to its connections with MSMEs, right? Can you give us an outline of sort of the nuts and bolts on how you operate and work with those MSMEs, and how you help your supply chain really navigate through uncertainty in a difficult operating environment in Haiti?
Sure. So to give you a little bit of background, Caribbean Bottling Company has been operating in Haiti since over 50 years now. And when this new group that is now owners of CBC came in 2005, they had to completely restructure the company because the company was bankrupt. And one of the first things that we did is that we solidified the relationships that we had with the SMSEs and with contractors, because even though we have a fleet of 40 vehicles, we also have about 20 contractors that come in and take delivery of products and bring them out to the market. And this, we've helped develop this network of contractors by providing financing or access to vehicles. And we've ensured also that our MSMEs have adequate margins that make it interesting for them to stay in business. We also accompany them in being able to reach out to their communities. We've done different projects in different communities by listening to what the community needs are. For example, we've dug wells in certain areas where it was very difficult for particularly women and children to get access to water because they were tasked with the job of going out to find water. So through our partners on the ground, we knew where we needed to provide those types of services. And that's what we did. So we did that together, and we continue to work together in identifying what the problems are in certain communities. It's been more difficult with the insecurity right now. There are some neighborhoods that we're not able to reach anymore. So we've had to move out of those neighborhoods completely because of insecurity. And honestly, the last people to have left those neighborhoods are MSMEs, interestingly enough. And they've really waited to the last minute to pull out. And they will be the first ones to get back into those communities once safety is provided to them. So in our experience, the resilience, the contacts, with the communities, they are the ones that are deeply embedded in those communities. They are the ones that are respected community leaders that have been working in the communities, that have been providing services that allow us to know better our customers and our clients. So they've had an absolutely essential role, and we really, in our company, in fact, we envision a world of wellness. And we've been able to create that environment within our company where personal success is linked to company success, is linked to community success. And it's a sort of oasis when you step into the compound or the campus where we're at. You feel like it's an oasis because you feel that people are more peaceful, are more secure. They not only have their income, but they have access to health services. They have access to pension plans. They have access to insurance. And what we see is the closer contact that we have with our MSMEs, they try to emulate that too. I've actually had a couple people come and talk to me and say, hey, what is the insurance that you're providing to your employees? Because I'd like to eventually provide insurance to my 5 employees that are working in my depot. And so they realize, okay, this world of wellness, we want to spread it out. And it's through contacts like that and through initiatives like that that we can spread out that well-being. And so really, it's essential again for us all to work together. I don't think it's something that's only the public sector. It's definitely the institutions and definitely the private sector too, that we all work together to encourage this job creation and the stability through the SMSEs. Thank you.
Yeah, that was absolutely fascinating. And I think what's super clear is partnership is what matters, right? And it is sort of individual, company, and community partnering together for success, which is just wonderful to hear.
Yes, and if you allow me, I think those partnerships have to transcend transactional behaviors. It has to be really long-term partnerships that you know that you're in it for the long run, that we're building something together, and that we move away from just this idea that it's simply a transaction. Thank you.
That's great. Thank you. Sophia, over to you now, and not to resurrect the coffee debate. But I was wondering if you can talk to us a little bit about some of the sectors that you've worked with the MSMEs and how they've adapted to changing security situations, and what kind of support do they require to help them sustain operations during periods of heightened insecurity and to position them for growth when things stabilize? I think you probably have loads of amazing examples around this.
Yes, so I mentioned a couple of sectors that we've worked in as MEPs. So we've very much focused on agriculture. We focused on the health sector. We focused on fisheries, livestock. In the livestock sector, we've mostly been looking at the dairy production and how to promote a local manufacture, local production of the dairy sector. But to move into examples, so I would go straight into 2020 when there was COVID-19 pandemic and there was already restricted imports to Yemen as a whole. So you can imagine a country that's going through conflict and then, disrupted imports and very few hospitals all over the country that had oxygen stations. And so it was a crisis all over the country. And what we saw was that there were SMEs that were producing medical grade oxygen, and they actually stepped up to provide this for local hospitals and healthcare providers. And we saw production lines being brought in and, that advancing. And it was something that started as a response to COVID. And now it's something that's all over the country where you have private sector MSMEs stepping in to provide basic health services for local communities, even those in rural areas. Another example, as I mentioned, is the dairy sector. We saw localization of how the value chains should be working within dairy producing communities, specifically that most of these dairy producers are women in rural areas. And so as a small push and a small support from our end in terms of, quality, standardization, packaging, pushed these women to formulate themselves to producer groups, but to also start a supply chain. So they had these supply chain enablers, micro, medium enterprises that were linking them to producers, to milk processing centers and larger farms. And so where we saw larger farms not having an incentive to procure milk, they actually saw the incentive. And so we saw a new production line in the dairy sector in Yemen as well. What started in one governorate in the country has expanded to now 3 governorates, and we are actually scaling up this program to another 3 governorates using the same localized kind of approach where we have supply chain enablers and the cold chain actually facilitating transport. And we've seen this in the dairy sector. We've also seen this in the fisheries sector. These are some of the most prominent sectors in Yemen for food security specifically and income generation. And lastly, with women entrepreneurs, I think this is one of my favorite programs that I've worked in Yemen, where we saw the dynamics shift. Women who were once very dependent on their husbands working in the oil industry, being, hired by the government, having stable incomes, suddenly finding themselves being the breadwinners, which is the case in many of the conflicts where women do find themselves being breadwinners. And so we saw them starting these entrepreneurship ventures and all of that, but they lacked access to information, access to markets, access to finance. They were very scared to even register and formalize their businesses because they thought formalizing a business meant that, there is a lot of requirements from the government, taxes and so on. And so we had this program where we had the trust of our donors to take the risk with us. And we thought, why not support these women and use a matching grant approach and a blended finance concept in Yemen and during the conflict. So the idea was that these women, before they could access the matching grant or a blended finance, which meant, matching grant plus loan with lower interest rates, they needed to be fast trained, have business advisory services, have a business continuity plan, risk management, understand what kind of productive assets they needed for their business to continue and expand. And these were the criteria that we put into the program. So what we did was we created a trust between the banking sector, microfinance and other banking sector, and the women entrepreneurs. So number one, they had to open bank accounts and they had to match the grant. So we would provide 70% of the grant, provided that they would provide 30%. Even though it was a huge requirement for women, we did the blended finance concept where we brought in the banking sector, told them, please provide loans and at a lower interest because they have been trained and because, they are accompanied by business advisors. So they do have the technical support. The second thing that we did, formalize their businesses, which meant that they needed to register using their own names. So, where the social norms was that a woman's business should be registered under her husband, brother, or father's name, they could actually have the ownership of having their own business. So it was a criteria that, was accepted even socially. And the third criteria was that they needed to access the market. So they needed to go to the markets to procure the assets that they needed. So they needed to look at the quality, the pricing, so that when we exited, they understood how the markets functioned. This project was a flagship project in Yemen during conflict and has actually, again, I mentioned this before in the spring meetings of the World Bank, but this project has actually, is now being implemented in Nigeria, in Burkina Faso, using the same systems that were implemented in Yemen. So I would answer your question and say that for every sector that we work in, we need to think differently, creatively, and take the risks, because if you think about a conflict settings and only look at the risks without thinking outside the box, then you might miss the opportunities. The banking sector in Yemen now has specialized products for women entrepreneurs, which is very interesting. Our impact shows that women are more committed to paying back loans, and they're more committed to following rules, regulations, and once they understand the system, they have access to information. They create stronger linkages as well. So this approach is not just being implemented for women entrepreneurs. We are also doing it for youth in different sectors in Yemen. So what kind of support? I would say flexible access to finance, trying to support entrepreneurs and MSMEs to have lower requirements in terms of collateral, supporting them in terms of access to markets, both locally, regional, if there is an opportunity to have access to regional markets, by also supporting quality, standardization, again, access to information, business development services. It's a whole package, as Roland said. With MSMEs, it's an ecosystem that needs to be strengthened. Thank you, and over to you.
Sophia, thank you so much. I mean, I think what you've highlighted is the importance of agility in the way that you design the engagements. But what is equally as fascinating is that despite the agility, you're clearly having replicability and scale. And I think that is something that is a lesson for all of us in terms of how we reach our MSMEs. Roland, if I could come to you and talk a little bit about agribusiness, and we spoke about this when we connected earlier, around the role that the Greenhouse Ventures Group has on sort of supporting agribusiness as an essential sector, but more importantly, how the role that agribusiness has in ensuring or facilitating stability in fragile markets, right? Because I think that's kind of central in so many themes. And your experience having worked with the IFC and thinking through how DFIs can provide targeted support to agribusiness companies, I think it would be great if we could get your perspective.
Sure, thank you. First of all, I like to make that notice that I am one of the local champions from Cameroon. So thanks. And
maybe we could say what the local champions is quickly.
Well, I would let.
We defer. All right.
I will let our boss. Well, it is an initiative by the IFC, identifying companies that have potential to scale and impact, and helping them reach that position where they can become bankable and can leverage now their position to be able to reach out to MSMEs or those fragile communities and areas where they are unable to get to. And I think it is very important, just picking back from everything that we've had to talk, because we have become that intersection between the different populations. You know, I would give you guys two sayings. For us to move from fragility to stability, we need to be able to move away from subsistence to surplus and then to enterprise. And the other thing we also have to know in that context is that where opportunity grows, fragility shrinks. Taking into account these two areas, that is where we had to start playing a very big role. Well, we couldn't have done that without having, having access to DFIs, be the government, to be able to give us that enabling environment for us to do the things that we have had to do. You see, we are working with a population that is vulnerable. And I'll add that to things that Etopi's talked about here, where you have businesses that are at the nano scale that would never have access to loans, never. And Cameroon can be a very different ecosystem, because what I would tell you here will shock most of you. In Cameroon, for you to have a land title, you have to have been born before 1974. I'm sure most of you are hearing that for the first time. Which means that myself here, I cannot own a land title. And banks, that is what they need as collateral. So all of a sudden, despite my business having all these numbers, commercial banks don't care about that. They care about what collateral you bring to the table. So imagine myself being able to be flown here, business class, and can sit here in front of world-class leaders, can go back to my country and not have access to a loan. Then think about those in those very fragile communities. So they're totally disconnected from it. We said to ourselves, we need to find a way to bridge that gap. And what we did, the creation of this credit union, which we did, was to actually fill the gap that no other credit union in Cameroon could fill. What did we do? One, we went to the communities. Many a times banks wait for people to come to them. And 98% of those banks are located in the urban areas. Tell me why somebody should leave their village, pay transport to go to town, pay to open an account, pay charges for having the account, and then request a loan which they probably never get. So you realize that they have no reason to feel that they should be bankable. So we took upon ourselves to say, no, we want to target this population that is unbankable and make them bankable. So we went to them, and I'm talking about people who've never had birth certificates, who never had ID cards, who don't feel the need of having that because they are born and bred in the village. They have no reason to travel to any place. They don't feel the need they would ever need to travel. So we even had to create them custom ID cards, just so that we can create bank accounts for them. And that was very important. The second aspect, to resolve the challenge of collateral, we came up with a model of social collateral. Because in these villages, all these people have is their little thatch house. You're talking houses about 2 square meters. You're not talking much house. But the land is there, and they don't feel the need. They don't own the land. So what do? We group them in 4s, give them a loan, and it is the obligation of those 4 persons to be able to repay that. And in the village, everybody knows everybody. Nobody wants to be blamed for being the one who defaulted on that loan. Nobody wants that village disgrace. So that worked very well. The repayment was wonderful. And the other part is you can have contracts with farmers, but when they harvest, whoever is the first buyer, they sell. But that social collateral solved that entire problem. We didn't even have to go there to see what was happening. And these are things that we have been able to do because we could have the support of all the entities that enable us to be able to do that. And I'm so happy because at least we can gain that recognition. We were also part of the AgriConnect forum that held in Cameroon. And myself being there for the first time, it gave us that opportunity to speak as the farmer. Because many a times the decisions that have been made in these big offices don't involve the guys on the ground. And so solutions get disconnected with the realities that are going on the ground. And that has been what has been going on. You would hear when the World Bank reads numbers in terms of how much has been deployed to different countries. I just said, but where is this money going to? So I think it is beginning to make a lot of sense now that people like us who are going right deep down into those village areas are now able to connect with those people who never felt that anybody connected with them. And I'm saying it from a perspective of, you know, when I go down to the villages, I talk as a farmer. I'm not talking as a banker. I'm not talking as a diasporan. I'm not talking as a business owner. I'm talking to them as a farmer. And when I talk to these farmers, I'm telling them we have the same problems. And we have been able to curate solutions that can help us all. Because as I was saying earlier, I have farms. I am able to produce. But the fact that I'm limited with my own farms, I cannot meet up the demand for certain supplies that have to be made. And the only way to solve that is aggregating from multiple persons. But how do you aggregate from persons that do not even feel that they are worth anything? So, but now it is being able to now get smallholder farmers from the different villages, different areas, putting them all together, and then being able to get their products and aggregate them, and then put them to different markets. So today we are able to supply to factories, we're able to supply to breweries, and we're even looking at the potential of being able to transform or get into animal feed production. Because today Cameroon still imports over 92% of animal feed. Why should we import animal feed when the raw materials, we can grow them? It makes no sense. So I think that when we begin to involve, you know, these MSMEs in the value chain of their own products, they begin to see that value and they begin to feel that this is encouraging because agriculture has been fading. People have been feeling that agriculture is a thing you do before you go to hell, you know? It's like that last thing that you should do because nothing else has worked. But we needed to change that whole perspective, honestly. Because honestly, if you look at Cameroon today, those who leave from agricultural training schools don't even go on to become farmers. They want to become consultants. They want to travel. There is nobody. If you find the people actually in the farms, they are totally illiterates. No education because they feel that, well, that is the only thing they could do. But those people become part of the community, and those are the people that are involved in FCV communities, which we have to target them. The mistake has been that we are in the cities creating solutions for the cities, thinking that that is where they are. No, they are in those areas that are inaccessible. And that is where we have to go there and create opportunities for them in those localities so they stay there and can actually enjoy the benefits of the opportunities that have been created in these places. But again, like I said, we cannot do that alone. Today, we are at a point where we are expanding so rapidly. We have gained the attention of, you know, villagers. They speak a lot. We started in one village. I remember May the 13th, which was on a Sunday. We were able to register over 587 farmers in the credit union. And when I talk to other big commercial banks, they ask me, how did you do that? But I'm saying this is because these people, they are in need of these solutions. So we are at that point where we can get to these last mile farmers, but we would need institutions like the IFC, the World Bank, the ADB to give us the support that we need so that we can leverage a lot of the opportunity resources that we do have, because I would not expect him to come and go to Tuboro, which is one of these very remote villages, but I can do that. And that is where that intersection between the opportunities and the collaborations with businesses like what we have and in multinational organizations like the one where we are today is very, very important.
So that's absolutely great. And I was just thinking, you'd mentioned this, but it's the going from the theoretical to the practical, but the practical is actually even more practical than just at the city level. It's practical to the last mile, right? And I think Ethiopians, I'm going to ask you to come in, and I'm going to take a little bit of the theoretical to the practical concept and think about, based off of these really amazing examples that we've heard today, how do we as the World Bank Group and other DFIs really kind of change our game, right, in terms of how we support MSMEs and particularly in FCV settings to better align our approach from a financing, advisory, just general policy perspective. Has this given you any sort of additional ideas or thoughts that that you really want to highlight for the audience?
So two things I'd say, picking up on Roland's last points. I actually think we need to be pushing for financing that is not collateral based at all. Okay. I was with President Bongo on Thursday and Friday in South Africa, and we had a discussion with some of the private sector there. And he was making the point, which is absolutely correct, that somehow we think it's okay for banks, and banks are supervised to lend to individuals based on their behaviors and their payments, their payment history. But we don't do the same thing for SMEs, right? So somewhere banking supervision needs to change to take into account the approach that's taken for individuals. Not only works for SMEs, is needed for SMEs, given the role that they play in the economy. But rather than depending on banking supervision changing and banks changing their attitude, I think we need to work with fintech. I think we need to work with non-bank financial institutions who are prepared to take an approach to extending credit that's not based on collateral, that's really based on behavior. And there are models out there, right? So some of what we've seen elsewhere in other markets, like in Thailand and what I've seen in India and elsewhere, we need to bring into Africa in support of the Rolands of the world and the people he's working with to try and get them extended credit. The second thing I'll say, and this is to pick up on the local champions initiative, we've been talking about the ecosystem, right? And what we're going to do for the ecosystem, whether it's the banking institutions or working with those who are providing capacity building for SMEs. But I think we have a responsibility as well in directly financing, right? And that's what we do with the local champions. With the local champions, for me, it's about identifying companies that have two things going for them. One, their growth potential is huge, but more importantly, they're solving a development problem, right? And taking them from being local champions to national champions, from national champions to being regional champions, and why not continental champions? So not only looking at the ecosystem, but actually putting our money and investing it in these companies that are solving development problems. I think that's a really important part of our mandate.
Yeah, that's super interesting, and I think
and global champion, she's right.
There we go.
And there's one example that people may not be aware of. So HDFC, which is the Housing Development Finance Corporation in India, okay, fourth largest financial institution in the world today. In the 70s was a little small IFC investment, right? Equity investment. We got out a long time ago, but we helped them grow into becoming what they are today.
That's a great example. And I think just thinking about a different approach in terms of collateral, but more importantly, bringing it all together to really reach those the last mile and the clients and linking it to the development impact that we can achieve, I think is super important and very, very interesting. Okay, so I was wondering if any of you in the room had some questions. Okay, I see questions, and then we have three or so online. So okay.
Okay, thank you very much, ladies and gentlemen. And I would like to say that coming from a background as a former Wall Street banker, sovereign debt restructuring syndication 100 years ago, came to Washington, got into development finance. I think we contributed to the first framework strategy paper on private sector and SME development for the World Bank. IFC was very involved 20-something years ago. Did energy sector development, the West Africa Power Pool, for example. I'm the person that designed the 5-year strategic business plan, the first one, 18 years ago, to roll the WAP out of the ECOWAS Energy Department into the region and so on. So I feel that though we're looking at Roland as the father of green farming, I think we should say Roland potentially in Cameroon is the father of bringing innovative thinking to catalyze rural development, because what he's doing is so broad and it is so important, especially when one looks at mitigating the migration from urban to rural societies, and which will help, I would imagine, in reducing the vulnerabilities that rural societies face, insurgency and all the crisis that is going on. So I feel when I listen to him, and I've spent 2 hours with Roland yesterday, speaking to Roland, and realized that he started as a micro entrepreneur. The green farming was the catalyst, and he has diversified so rapidly. It's not just the farming. He is also involved at this time in the financial sector because the credit union is part of the financial sector. So I feel that I still need to learn more about the farming, reaping, storage, spoilage. How do you manage that? But at the same time, to see whether or not the World Bank, IBRD, because they're also a public-private partnership with the government, ISC, whether we believe that we see an opportunity, and we know we talk about collateral. We have not spoken about collateral law. You're saying even land, you can't have title to land, and we know fintech and all that is up there. But is it possible to help Roland to grow up that credit union into a more diversified financial institution to address not just his region of Cameroon, but the other areas, other communities in Cameroon, and probably potentially it could be a model that one could probably duplicate or replicate around the world, even in collaboration with what Madam is doing in Haiti, which is amazing that you mentioned the insurance and other subsectors of the financial services industry, because in the end it has to be a holistic framework for development, for sustainability, reducing fragility and vulnerabilities. Thank you.
There was a question just next to. Yeah.
Yes, teeing off this this issue of collateral, it's my impression that one of the challenges to development, particularly in the kind of more violent part of the FCV spectrum, is concerns about investing in assets and those assets being at risk from obviously destruction and whatever in a conflict setting. And so I was wondering if you could speak to this question of what's the balance between investment as opposed to insurance when it comes to trying to support these small enterprises and trying to get them to grow from small to medium, where they're actually growing and providing capital or introducing capital into an economy.
Okay, great, thank you. Okay.
Thank you. My name is Johannes. I work for Catholic Relief Service. So I'm quite happy, to hear, always happy to hear, when SMEs and MSMEs succeeding, but particularly when SMEs who work in agriculture businesses succeeding, because it has quite a bit of things. So, but when we see, from our experience, some of the challenges we see, even with successful SMEs in this sector, is kind of, the tendency to focus maybe more on high value productive agricultural products, and also the challenges in addressing the common good. I mean, individually, as a specific SMEs, they could do such a fantastic job, but again, yet they have to rely on the same natural resource base. And okay, let's say you are investing with good technologies and services in your farm, and you have such a technology, but still you have to rely the same water resource, which is limited, and which also is leading to potential challenge. So I would like to hear from those very successful Cameroon and Yemen example, for example, how do they see some of this potentially the common good challenge, as well as kind of the tendency not to invest as SMEs on stable crops and food security crops, and to focus more on sort of more, let's say, market oriented. I mean, everything is market oriented, but very high value products. Over. Thank you.
Thank you. And there was just one more here.
Hello, everyone. My name is Franz Said. I'm a consultant in livelihoods and youth employment. You have shared a great deal of information and encouragement, but I have one question for all three of you who have shared a very important example. In the context of fragility, violence, and conflict, what has been that one or two ingredients that has been critical for your company to grow to that scale? And as an example, that can be global. And Tamara as well, with regard to Haiti, I'm from Haiti, and I know how hard it is to grow a company there and to bring it to that model. What has been that one thing that you think that has been critical to create that, not an ecosystem to say, but a shift that has give that company a chance to create a model that has been that we can learn from to encourage other entrepreneurs in that space? Thank you.
Okay, great. And then I think we'll go online, but let's answer these questions first and then we can go online. So if I could ask Ethiopia, so I'm going to put you on the spot around scaling financing for Roland, as well as perhaps the balancing on the investment and the insurance in fragile context, right? If things deteriorate.
Oh, I think I addressed the scaling finance. I think the scaling finance is really working with, as I said, let's set the banks aside. But if you look at the success we've had working with fintech and look at the success we've had working with non-bank financial institutions who are prepared and have extended credit, not on the basis of collateral, but on the basis of cash flows. These are cash flow businesses, right? And they're financing cash flows. And very successful businesses, and they're people who are prepared to actually finance the cash flows. They're not worried about the investment side of things. They're not worried about the destruction of whatever it is that the company's invested in. They're really focused on, will they be able to pay me back based on what I see in terms of the cash flows that the business has. It's just a question of replicating that. We've had success in doing that in other markets. We need to bring that to Africa. And the other thing we need to do, and this is what Tamara was talking about, is looking at supply chain finance, right? So there are a number of instances where we worked with banks that have corporate clients who have a supply chain. And that supply chain is very successful by virtue of the success of that corporate and being willing to finance the supply chain based on the relationship they have with the corporate. And that's been wildly successful throughout Africa. So it's just a question of taking all of this and scaling it. While I'm at it, I'm going to try and answer the question from the gentleman from the Catholic Relief Services, in that if you look, and you sound like you're Ethiopian, so I'm going to use Ethiopia as an example. What we're doing in Ethiopia, we have with Lersha and Kafia, two ag techs, we have aggregated 1 million farmers for one and 5 million for the other. Okay, and these are not cash-based crops that we're talking about, or let me put it, these are not export-based crops, right? These are crops for consumption in the country. And through the use of technology, we've been able to figure out what these farmers need. The ag techs provide it. We're getting banks to actually lend to them based on the strength of the data that's collected. We're creating this virtuous circle and seeing productivity go up 20, 30, 40% for these farmers. Now, there is a public good component to this, and that's why it's important that we work with the bank, because yes, water systems are going to be important. There are a number of things that we're going to depend on the public for, right? But in an integrated approach, what we're seeing is we're increasing productivity and incomes for these farmers in ways consistent with the public good. And all of this through the use of technology. Simply using technology to aggregate farmers to turn them into a business as an aggregate, as opposed to individual farmers trying to make it on their own.
Can you leverage also your MEGA hat on the guarantee side? So I know it's a little bit more difficult, right?
So the MEGA, the issue with MEGA is that MEGA's products apply when it comes to cross-border investment, right? They provide guarantees for investors that are investing from the outside into a country, right? And what we're seeing, for example, in the agricultural space, and what I was just talking about, it's really local. These are local ag techs and local banks that are providing the financing. So the tool doesn't have as much application in that context.
So if I could go to Tamara, Sophia, and Roland to talk a little bit about the one or two critical ingredients that you've leveraged to grow, and thinking a little bit about the high value sort of marketable stuff versus sort of important foundational food stuff. So maybe Roland, we start with you.
Yes. talking about those core ingredients, especially to succeeding in these environments, one of it is innovation. We must innovate. The reason why things don't seem to change is because we've been applying the same solutions to the same old problems and expecting change. You know, in Africa, they say, you guys cannot keep washing your hands in the same water and expecting those hands to get clean, you know, and that's the problem. So we need to shift the way we are, you know, implementing solutions. And the challenge is that many a times companies don't have that budget for R&D. You know, research and development is an aspect which we need to start thinking how we invest in. They call it the value of death, the time period for a company in Africa to survive. You know, here in the US, we have it at 3 years. In Africa, it's 10 years. So if a company has not made 10 years, don't count on them. So there is still that problem, and it takes innovation. You know, where I come from, they say the tree that grows the tallest is the most flexible. And so there is that aspect where we have to constantly adapt and build solutions that are culturally adaptable. We've had this tendency where we create solutions in the laboratories and they want to implement them on these populations because, yeah, they've been described as they live in the rural areas, they live under $1 a day, they eat rice every day. No, it doesn't work anymore. Our solutions have been adapted to every locality where they are in the context in which we understand them. The second aspect in terms of high valued crops and all of that, you know, if you went to the market today to buy potatoes and you get there and there were no potatoes, you find plantains, you would buy plantains. And that is what is happening. What we need to understand is that people buy what they see. And the reason why rice is so consumed is because every street corner you can find rice in the stores, in the gas station, and all of that. So our idea was not looking at things that people would normally say where they're high valued, it's what people can grow. Because many a times a company gets into a locality and they say, no, let's everybody produce potatoes because that's what sells on the market. But maybe these guys don't even have the expertise, the tools to grow those potatoes. And it's a problem. We always want to let people change what they're normally been doing, expecting that whatever they do anew to satisfy a growing market is what happens. No, those people fail. The moment you turn your back, they go back to what they know best.
Yeah, no, that's, I think that's very, very apt. Tamara, if we could come to you and then to Safia quickly.
Sure. So I think in the case of CBC, where we've moved from being a medium-sized enterprise to a larger size company over the past 20 years, despite all the different challenges that there have been in Haiti, is that we've never lost focus on our Northern Star. And our Northern Star has been this world of wellness. And we've been true to our values. And our values have been really to listen to our customers, our customer service, the quality of our products. So we've consistently invested in improving our processes and our equipment to be able to give higher quality products to the market. We've also had a very, very strong focus on integrity. Just yesterday, we were recognized by the Ministry of Commerce as the 15th largest taxpayer in Haiti. So we were honored to receive that distinction. We also have a sense of responsibility that's very strong. So our corporate social responsibility, we've always invested back into the community and we invest back in the country. And so we've been able to build a strong sense of trust within the population and within the market. So that has been very helpful. And then we have a system of continuous improvement. We're ISO 9001 certified. So we do all our planning with discipline. We do our execution. We measure our results. Everybody is looking towards success because we've aligned ourselves where the company goals are also the employee goals. So we have nice compensation packages that are tied to performance. So it's really, and these compensation packages that are tied to performance, we also link them to our vendors and the SMEs that we work with as well. And so that has helped us grow the business quite satisfactorily within the past few years. But we've also had amazing partners, the ones that financed us from the get-go, Sojibank, that took the risk to invest with us. We also at one point issued bonds on the local market with Profien, the first investment bank in Haiti. We also have partners like the IFC who not only financed our operation, but enabled us to get some technical assistance. So we used that technical assistance to do an energy efficiency study. And it took us about 4 or 5 years to be able to retrofit all our systems, put in soft start motors on our equipment, change all the lighting to LED lighting, change all our air conditioners and compressors. And now today in June, we're going to start our solar powered system where we're looking at about producing 2 megabytes of energy per hour. So it's been a story with some ups and downs, but the fact that we've had amazing partners, that we've had the trust of the market, and that we've been able to build ourselves up with an amazing team of committed members that they consider themselves part of our family, and they are part of our CBC family. That's what has enabled us not only to survive, but to really do well in this challenging environment.
So that's great, cognizant of the fact that people have to move on to the next one. Sophia, I'm going to have to park your comments on this one. I just want to say I think I could probably have sat here for another hour and just heard from all of you the great experience and the great ideas that you have, and I can't thank you enough for taking the time out of your busy schedules to be with us and to give us these amazing insights that we will take to heart and hopefully grow the agenda and the response that we can have in fragile settings. So thank you so much. We really appreciate it.
Thank you. Thank you so much, everyone.
Recording stopped. Recording in progress.